Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about TELEDYNE Technologies INC quarterly report. TELEDYNE Technologies Incorporated offers a diverse range of businesses and services across various industries. Some of the key areas include digital imaging, visible spectrum sensors, digital cameras, infrared, ultraviolet, X-ray spectra products, micro-electromechanical systems, semiconductors instrumentation, monitoring, control, electronic test and measurement equipment, power and communications connectivity devices, aerospace and defense electronics, electronic components, subsystems, data acquisition and communications components, harsh environment interconnects, general aviation batteries, engineered systems, systems engineering and integration, technology development, manufacturing solutions for defense, space, environmental and energy applications. These services cater to various markets including industrial growth, aerospace, defense, and more. The recent surge in Teledyne Technologies Inc.'s stock price can be attributed to a combination of strategic acquisitions, strong financial performance, and positive market trends. A key acquisition was the purchase of Excellitas Technologies' defense and space electronics businesses for $710 million, which is expected to boost earnings per share and strengthen its aerospace and defense electronics segment. Consistent earnings beats throughout 2025 have also contributed to the stock price increase. The company has exceeded Wall Street expectations with quarterly earnings reports, including record sales in Q2 2025 and strong growth in the aerospace and defense electronics segment. Additionally, strategic acquisitions such as the purchase of Littelfuse Inc.'s Maritron business assets have enhanced its capabilities. Increased institutional interest and analyst upgrades have also played a role, with several analysts raising their outlooks on the company due to its aerospace and defense capabilities. These developments have collectively fostered investor confidence, leading to the substantial increase in Teledyne Technologies Inc.'s stock price over the past year. The primary drivers of revenue growth or decline are primarily influenced by strategic acquisitions and market performance. Key contributors to revenue growth include the Qioptic, Adimec, and Veilport acquisitions, which have expanded the company's presence in aerospace and defense markets. Additionally, strong performances from the digital imaging segment, plus 10.6% growth, and aerospace and defense electronics segment, plus 37.6% growth, have driven revenue increases. However, certain segments have experienced declines, including the instrumentation segment, minus 5.7% decline, and engineered systems segment, minus 8.1% decline. External factors such as tariffs, trade restrictions, U.S. government shutdowns, and exchange rate fluctuations also pose potential risks to revenue growth. Net income and profit margins. A shift in trends. The financial summary reveals a mixed picture of net income and profit margins for the given period. In the third quarter of 2025, net income decreased by 15.8% compared to the previous year, attributed to increased expenses or decreased revenue. However, when looking at the 9-month period, net income remained relatively flat. On the other hand, operating income margin showed an increase of 1.1 percentage points for the 9 months, driven by higher net sales and a favorable program mix. In contrast, the third quarter saw a decrease in operating income margin by 0.3 percentage points. Net sales margin also increased by 0.4 percentage points in the third quarter. The reasons behind these changes are multifaceted, with increased expenses or decreased revenue contributing to the decline in net income. Conversely, higher net sales and favorable program mix led to an increase in operating income margin. These trends suggest a shift in the company's financial performance, warranting closer examination of its operational strategies and revenue streams. The company's financial performance indicates a positive trend in its operating cash flow. Despite a slight decline in net cash provided by operating activities from $859.5 million in 2024 to $812.3 million in 2025, the overall increase in operating income for the first 9 months of 2025 suggests a stable and improving financial position. The company's cash reserves also remain substantial at $528.6 million as of September 28, 2025. These indicators collectively confirm that the company is generating positive operating cash flow. The company's debt level has experienced some fluctuations over the past year. Notably, total debt increased from $2,533,400,000 to $649 million between 2024 and 2025. Additionally, the notional amount of cross-currency swaps rose significantly from €0 to €450 million in 2025. Regarding interest expenses, there is evidence of an increase. The net gain/loss recognized in interest expense due to foreign exchange contracts was $2.2 million in 2024 and $6.1 million in 2025. Furthermore, the interest and debt expense, net of interest income, increased from $44.2 million to $47.5 million between the 2 years. While there are some variations in the data, it appears that both debt level and interest expenses have changed significantly over the past year. The company's financial performance has shown mixed results across various segments and regions. The aerospace and defense electronics segment led the way with a significant increase of 37.6% in net sales, followed by instrumentation and digital imaging, which saw increases of 3.9% and 2.2%, respectively. On the other hand, engineered systems suffered a decline of 8.1% in net sales. Regionally, the United States and Europe demonstrated growth, with the U.S. experiencing an increase from $775 million to $815.3 million, and Europe rising from $341.8 million to $373.9 million. However, Asia lagged behind, showing a slight decline in net sales from $218 million to $229.2 million. These results indicate that while some segments and regions are thriving, others require attention to improve performance. For management's outlook on company strategy, the company's primary concern is managing market risk through hedging activities. To achieve this, management aims to protect future cash flows and minimize earnings volatility by utilizing foreign currency forward contracts. In terms of strategy, the company is focused on growth in 4 key business segments: digital imaging, instrumentation, aerospace and defense electronics, and engineered systems. Management plans to strengthen these areas through targeted acquisitions and product development. To optimize performance, the company will streamline operations, reduce costs, and mitigate the impact of tariffs. Overall, management's strategy emphasizes strategic growth, operational efficiency, and risk management. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In 2025, the company paid out $6.5 million in dividends, representing just 0.1% of net income for that year. Additionally, the company has authorized up to $2 billion for share buybacks, demonstrating a commitment to rewarding investors while also maintaining flexibility in its capital allocation strategy. Concerns about inventory buildup or supply chain disruption are indeed present. Inventory buildup is a confirmed issue, as indicated on page 21. Supply chain disruption concerns arise from several factors: rare earth minerals export restrictions by China, potential tariffs, and trade sanctions between the U.S. and China, integration challenges of new acquisitions into existing supply chains, semiconductor shortages, and higher shipping costs due to inflation, labor shortages, and competition for skilled personnel. These risks highlight the need for careful management and contingency planning to mitigate potential disruptions. That concludes the financial summary for TELEDYNE Technologies Inc. Feel free to comment below, and I will be happy to answer them when possible.